Hello, I'm Alison Kempenaar from Lexis PSL Private Client, and I'm joined here today by Ben Grist, who is a partner at Dixon Wilson Chartered Accountants. And Ben has kindly come in today to talk to us about the eventful summer that we've just had in relation to the changes of the rules relating to the taxation of non-domiciled individuals. Ben, I mentioned that this has been an eventful summer. Perhaps you could start by summarising exactly what has happened.
Well, it has been an eventful summer. Thank you, Alison, for having me. Just as all the tax advisors were packing up their books for their summer holidays, the Chancellor decided he had other plans and released his summer budget, which contained some fairly significant changes to the way in which individuals are taxed in the UK. And one of the most interesting ones, or certainly one of the most important ones, relates to the long-term taxation treatment of res non-doms in the UK. Now, a res non-dom, generally speaking, is someone who is living in the UK, but for who the UK is not their home country. Res non-doms have, for a very long time, been able to enjoy a very favourable treatment of tax called the remittance basis. Unlike you and I, who pay tax on the arising basis, we declare our worldwide income and gains, a remittance basis user is able to only pay UK tax on their foreign income and gains if they're remitted to the UK. They still pay tax on their UK income and gains as normal. It's been a very attractive regime which has seen a lot of foreign money and foreign individuals move to the UK precisely for to benefit from this form of taxation. Now, prior to this announcement in the summer, such an individual could have claimed that remittance basis indefinitely, albeit assuming that they always retained their domicile outside of the UK, and that the UK didn't become their home country. And also after 7 years, they would have to pay an annual charge to continue claiming it. But subject to those, they could claim it indefinitely, and some people did claim, I believe some clients did claim it for a very, very long time. What's changed is essentially a cap has been put on the time limit for which an individual can claim the remittance basis. Under the new rules, which are coming into force from April 2017, an individual can only claim the remittance basis up until their 15th year. And there's now a test that if you've been resident for more than 15 out of 20 years in the UK, you can no longer claim the remittance basis, and you will have to pay tax thereafter on your worldwide income and gains, just like any normal person in the UK. This is going to represent a pretty significant change to the way they're taxed.
Yes, I see. It does sound like a major change. And so what will it mean in practice for non-doms?
That's a good question. I think the first thing I'd say is probably don't panic. I think there are a lot of headlines about this, but actually it's only a small minority of res non-doms who are going to be affected by this. It's only the res non-doms who have been claiming the remittance basis for a long time, have been living in the UK for more than 15 years, or I suppose approaching 15 years, that are going to be affected. Many people don't choose this basis, for various reasons. The annual charge might be too expensive. And for the minority who are going to be affected, I suppose the thing to say is, well, actually, we've still got until April 2017 and before they come in. So it gives them a chance to at least review their affairs and see what action they might take before this change comes in. But I should stress, I'm not seeing many clients sort of starting to pack their bags just yet. I think one key concern many of my clients had when the headlines were announced was that all of their historic unremitted income and gains would automatically, on the 5th of April 2007, become taxable in the UK, which would have been potentially disastrous for some of them. We don't believe that's the case. It should be the case that actually, as long as the historic unremitted income and gains remain outside of the UK, even after April 2017, they will still not be taxable here. So I think my main piece of advice for non-doms is, even though they haven't perhaps reviewed their affairs recently, now is the time to look at their non-UK affairs and actually see how these changes will affect them.
Yes, I see. And so what will it mean for advisors?
Well, a very busy year and a half. It's going to be a lot of work, which I suppose is a good thing for us. But in terms of, I suppose the lawyers, for example, there'll be a lot of work for them in terms of reviewing offshore structures, how they're going to be affected by the changes, because there were other changes in the summer budget as well in relation to UK property and the taxation of distributions from trusts. So I imagine that the lawyers will be very busy reviewing structures to see how appropriate they are in a post-April 2017 world. I think for the bankers and wealth managers out there, I think we're going to see a wholesale change to the way in which they have to manage money for long-term res non-doms. And the focus will be on ensuring that this historic unremitted income and gains, we call them mixed funds, that the mixed funds actually remain outside of the UK. But at the same time, there needs to be a mechanism by which the income and gains that arise each year after April 2017, when the remittance basis is no longer available, well, we know those income and gains are going to be taxable in the UK. So it's very important that there is a mechanism by which res non-doms can remit specifically that income and gains. Well, firstly, to pay the tax charge, which they will suffer on it. I think as a result, we'll also see a lot of interest in offshore funds, not as a method, I should stress, of sort of avoiding tax, but actually as a way of just sort of consolidating an individual's affairs in a post-April 17 world. And for the accountants, the poor accountants, we're going to see a lot more complexity. There's no doubt about that. I think in the past, a lot of our remittance basis users, those type of clients, had very simple tax returns actually. All they would contain would be a claim for the remittance basis and probably a few bits of UK income and gains that they happen to receive. Going forward, once the remittance basis is no longer available, we have to be ready to, well, file a tax return to declare these individuals worldwide income and gains, regardless of where it arises. And very importantly, we have to be filing in a UK tax compliant fashion. So some jurisdictions don't provide information in the best sort of format. So I think there'll be a lot of work there. And also, I suppose the other area of interest we're seeing is on res non-doms who have been here a while and perhaps have these pots of mixed funds and actually looking to ascertain, what is the cost of bringing this money to the UK? How disastrous would it be? How expensive would it be? And that's definitely an exercise we're getting involved in. And it's not straightforward, but it can be done. I think that, there's been some talk about whether the government would introduce some form of amnesty for these people to remit money, perhaps at a composite tax rate. Now, I think that's pretty wishful thinking, in my opinion, because it's simply not in the government's interest to provide that sort of, option to them. So I think for the meantime, we're stuck with, unfortunately, the old-fashioned rules, which means the accountants, crunching the numbers.
I see. And in addition to all these changes to the remittance basis, are there any changes to inheritance tax for non-doms?
You're quite right. I mean, the other main part of the taxation system where res non-doms benefit from, aside from the remittance basis and the income and gains they realise on a year-to-year basis, is inheritance tax. Res non-doms, if they were to die living in the UK, they generally don't pay inheritance tax on their non-UK assets. Again, they will always pay UK inheritance tax on their UK assets. But such an individual would not pay UK inheritance tax on their non-UK assets until they've lived in the UK for 17 years. We currently apply a test, unlike the remittance basis, which could be claimed indefinitely. For inheritance tax, we already have a deemed domicile concept, which, as things currently stand, says that once you've been resident for 17 out of 20 years in the UK, you are treated as deemed domicile, which means your worldwide assets are suddenly subject to inheritance tax. This change, which has been announced this summer as part of the summer budget, again, comes into effect from April 2017 and very simply aligns the deemed domicile rules so that actually now an individual for inheritance tax will be deemed domicile for inheritance tax once they've been resident for 15 out of 20 rather than 17 out of 20 years. I suppose one interesting corollary of that is the res non-dom who moves to the UK for a long time, becomes deemed domiciled here, and then decides actually the UK is not for them, they want to leave the UK. Now, as things currently stand, that individual would still be on the hook for inheritance tax in the UK up to 3 years after they left the UK. Now, under the new rules, applying the 15 out of 20 test, it's actually, you thought it's 5, but it's going to be, the wording of the rules we think, is that such an individual would need to be gone for 6 years before they escape that inheritance tax tail. And so I think the natural thing we're probably going to see is a flurry of activity in the life insurance market with individuals seeking to cover that sort of 6-year tail after they've left the UK.
Right. And what about individuals who have a domicile of origin in the UK? Are there any changes that they need to be aware of?
There are. This is sort of separate from all the other changes about res non-doms. This is looking really at, I suppose you'd call it the expat community informally, but these are individuals who were born in the UK and whose domicile of origin was in the UK, and broadly that means that their father was British. So we're looking at individuals born in the UK to British fathers. Those individuals, in a small minority of cases, might move away from the UK for a number of years and settle somewhere else. And that would become their home country, and ordinarily you would say that is their domicile. And they can obtain a domicile of choice in another country. But what these new changes will mean, again, all effective April 2017, is that when such an individual returns to the UK, they can no longer claim anything other than they are UK domicile. Their UK domicile reverts immediately on the date of their return. And so in a very extreme case, in fact, I've got a client who falls into this case. They were born in the UK to a British father, but emigrated aged 2 to Canada, where they spent their entire life, and now age 70, they're thinking of moving, I suppose, back to the UK. And they would have thought that Canada is their home. Canada is very much where they feel that's their home country. They feel they have a domicile of choice in Canada, and they do. But the way these rules will work will mean that such an individual is going to be caught, and from the day he returns, he will be treated just as if he never left. The whole Canada period is completely wiped. And so I think the message for sort of returning expats, I guess, is what is really who this is focused at. The message for them is very clear. You've got to be prepared and expect full tax once you return to the UK, and you will not enjoy any benefits from the non-dom regime once you're back in the UK.
Right. And what do you think the longer term impact of the rules will be?
It's a tricky one. I think the longer term impact of this, I don't think we're going to see everyone disappearing. So I think the rules have been quite sensitively brought in. I think most people actually think that 15 years is a pretty fair amount of time to be able to claim these attractive tax benefits in the UK. Particularly if you look across at other countries and see what the comparables are, the UK is still pretty attractive for foreign wealthy individuals to come. I certainly haven't seen a slowdown in the people considering moving here, again, because I think that's the whole purpose of these rules, is to try and not put off people moving to the UK, and it's certainly doing that. But at the same time, the rules are saying there has to come a point now where once you've been here for long enough, you are going to be treated just like everyone who is born in the UK who is UK domiciled. And I don't think there's a huge amount of outrage at that. Certainly I haven't come across it yet. But with all these things, the devil will be in the detail of how the rules come in. So I suppose we still have to wait for that. And I suppose just finally on a personal note, I think if I had a wish, it would be for the government to potentially simplify the remittance basis. I mean, this sounds a little bit like turkeys voting for Christmas, but the rules have become so horrendously complicated, after so many changes, that actually trying to operate them in practice means that almost all clients claiming the remittance basis do need professional advice. So I would welcome some form of simplicity there, but I think that probably is, as I say, wishful thinking.
Yes, well, I'm sure a lot of practitioners and listeners would also wish for the same thing and would agree with that sentiment wholeheartedly. That's a very clear summary of those changes. Thank you very much for coming in to talk to us today, Ben.
Welcome.